Question 1. Which of the following best describes the primary purpose of commercial umbrella insurance? A. To provide additional coverage for property damages only. B. To extend liability coverage over existing primary insurance policies. C. To cover only claims that are not related to bodily injury. D. To replace primary policies with a higher coverage limit. Answer: B. To extend liability coverage over existing primary insurance policies. Explanation: commercial umbrella insurance provides excess coverage above and beyond the limits of the primary policies such as commercial general liability (CGL), commercial auto and workers' compensation. It is not designed to replace these policies, but rather to extend their coverage when the limits of these primary policies are exhausted. Its coverage is vital for businesses that may face high-cost claims such as major bodily injury or property damage. It doesn't cover property damages alone, which would be covered under property insurance, nor does it specifically target non-bodily injury claims. Question 2. Scenario question. Mr. Taylor owns a small business and has purchased a business owner's policy BOP to cover his operations. A fire in the building caused extensive damage to both the property and the business income. Mr. Taylor has also sustained significant losses due to the interruption of his operations. What coverage under the BOP would cover Mr. Taylor's lost income? A. General liability coverage. B. Business interruption coverage. C. Property coverage. D. Workers' compensation coverage. Answer: B. Business interruption coverage. Explanation: the business interruption coverage under business owner's policy BOP is designed to cover the loss of income a business experiences due to a covered event, such as a fire, which disrupts operations. This coverage compensates the business for the income lost during the period of restoration, helping to mitigate the financial strain caused by the interruption of operations. While property coverage would address physical damage to the building and assets, it does not cover lost income. General liability and workers' compensation are unrelated to business income loss and focus on liability risks and employee-related injuries, respectively. Question 3. Which of the following is a common exclusion in commercial general liability (CGL) policies? A. Bodily injury resulting from an employee's actions. B. Property damage to the insured's own property. C. Claims arising from criminal activity. D. Medical payments for injuries sustained on business premises. Answer: B. Property damage to the insured's own property. Explanation: in a commercial general liability (CGL) policy, one of the most common exclusions is property damage to the insured's own property. CGL is designed to cover third-party claims for bodily injury or property damage that occur due to the insured's operations. However, it does not cover damages to the insured's own property, as this is considered a risk that should be addressed under a separate property insurance policy. Claims arising from criminal activity may also be excluded, but this depends on the policy language and the nature of the crime. Medical payments for injuries sustained on business premises are typically covered under the CGL policy's medical payments provision, though there are limits and exclusions. Question 4. Which of the following is NOT typically covered under a standard workers' compensation insurance policy? A. Medical expenses related to an employee's on-the-job injury. B. Wage replacement benefits during the employee's recovery. C. Pain and suffering damages resulting from a work-related injury. D. Death benefits to the employee's family if the injury results in death. Answer: C. Pain and suffering damages resulting from a work-related injury. Explanation: workers' compensation insurance is designed to provide benefits for medical expenses, wage replacement, and death benefits for employees who suffer work-related injuries or illnesses. However, it does not cover pain and suffering damages, which are typically part of a liability claim in a lawsuit. The system is based on a no-fault approach, meaning employees cannot sue for emotional distress or pain and suffering as part of a workers' compensation claim. This exclusion helps maintain the system's purpose: quick, no-fault benefits for workplace injuries. Question 5. Which of the following is true regarding the differences between an occurrence policy and a claims-made policy under general liability insurance? A. Claims-made policies cover claims only if the event occurs during the policy period and the claim is filed during the same period. B. Occurrence policies cover claims that occur after the policy expires as long as the claim is made within the statute of limitations. C. Occurrence policies require a claim to be reported during the policy period for coverage. D. Claims-made policies extend coverage for an unlimited time after the policy expires. Answer: A. Claims-made policies cover claims only if the event occurs during the policy period and the claim is filed during the same period. Explanation: a claims-made policy covers claims only if both the event occurs and the claim is filed during the policy period. This means that the timing of the claim filing is critical. Coverage is not extended for claims made after the policy period ends. In contrast, an occurrence policy provides coverage for incidents that occur during the policy period, even if the claim is made after the policy expires, as long as the incident occurred while the policy was active. This is a key difference between the two types of policies, and understanding it is important for assessing long-term coverage. Question 6. Which of the following is a characteristic of commercial auto insurance that typically is not included in a personal auto policy? A. Coverage for physical damage to a personal vehicle. B. Liability coverage for vehicles owned by a business. C. Uninsured underinsured motorist coverage for commercial drivers. D. Medical payments for injuries sustained in an accident. Answer: B. Liability coverage for vehicles owned by a business. Explanation: commercial auto insurance is designed to cover vehicles used for business purposes, whereas personal auto insurance generally covers vehicles used for personal purposes. A personal auto policy would not typically cover liability for vehicles owned by a business or used for business operations. Commercial auto insurance includes coverage for business-owned vehicles and provides liability protection in case the vehicle causes damage or injury while used for business purposes, while personal auto insurance covers physical damage, medical payments, and sometimes uninsured motorist coverage for personal vehicles. Commercial policies are more comprehensive for business needs. Question 7. Scenario question MS. Harrison operates a legal firm and has purchased professional liability insurance to cover her practice. She is facing a lawsuit due to an error in her legal advice that caused significant financial loss to a client. What type of coverage is provided under professional liability insurance? A. Coverage for bodily injury caused by legal malpractice. B. Coverage for errors and omissions in the performance of professional services. C. Coverage for physical damage to office equipment. D. Coverage for injuries caused by employees during the course of their work. Answer: B. Coverage for errors and omissions in the performance of professional services. Explanation: professional liability insurance, also known as errors and omissions coverage, provides protection for professionals, such as lawyers, accountants, and doctors, against claims of negligence or mistakes in the services they provide. In this scenario, MS Harrison is facing a lawsuit due to an error in legal advice, and coverage is the correct coverage for errors made during the performance of her professional duties. It does not cover bodily injury or property damage, which would be covered under general liability insurance, or injuries caused by employees, which would fall under workers' compensation insurance. Question 8. What is the primary purpose of a business interruption insurance policy? A. To reimburse a business for physical damages caused by natural disasters. B. To compensate for loss of business income resulting from a covered event. C. To cover legal expenses associated with business lawsuits. D. To provide coverage for employee injuries sustained during work-related activities. Answer: B. To compensate for loss of business income resulting from a covered event. Explanation: business interruption insurance, also known as business income insurance, compensates a business for lost income if operations are interrupted due to a covered event, such as a fire or flood. It helps the business maintain financial stability while it recovers from the event. It is not designed to cover physical damages, which would fall under property insurance, legal expenses covered by liability insurance, or worker injuries covered by workers' compensation. This type of coverage is essential for ensuring a business can recover financially during periods when normal operations are halted. Question 9. Which of the following is a key distinction between general liability insurance and professional liability insurance? A. General liability insurance covers bodily injury and property damage caused by the insured, while professional liability insurance covers errors in professional services. B. General liability insurance only applies to property damage, while professional liability insurance covers bodily injury. C. General liability insurance covers damages caused by criminal actions, while professional liability insurance covers negligence. D. General liability insurance is required by law, while professional liability insurance is optional for businesses. Answer: A. General liability insurance covers bodily injury and property damage caused by the insured, while professional liability insurance covers errors in professional services. Explanation: the primary distinction between general liability insurance and professional liability insurance is the type of coverage they provide. General liability insurance typically covers bodily injury and property damage caused by the insured's business operations, such as slip and fall accidents or property damage on the premises. Professional liability insurance, on the other hand, covers errors and omissions in the performance of professional services. This is particularly relevant for businesses that provide advice or specialized services, such as legal or medical practices. General liability is not required to cover negligence or professional mistakes, which is where professional liability steps in. Question 10. Which of the following best describes the coverage provided under a crime insurance policy? A. Coverage for employee theft or dishonesty. B. Coverage for damage to property caused by criminal acts. C. Coverage for loss of business income due to theft. D. Coverage for liability arising from a criminal act. Answer A. Coverage for employee theft or dishonesty. Explanation. Crime insurance is specifically designed to cover losses resulting from criminal acts, particularly those involving employee dishonesty or theft. This can include employee theft of money or property, forgery, or computer fraud. It does not typically cover damages to property caused by criminal acts, which would be covered under property insurance, or loss of income, which would fall under business interruption insurance. Additionally, crime insurance is not designed to cover liability arising from criminal acts. This would typically be handled by a general liability insurance policy. Question 11. What is the purpose of an umbrella insurance policy? A. To provide coverage for liability claims that exceed the limits of primary insurance policies. B. To cover personal property damage caused by natural disasters. C. To provide health insurance for the insured and their family members. D. To cover legal fees for criminal defense. Answer A. To provide coverage for liability claims that exceed the limits of primary insurance policies. Explanation. Umbrella insurance provides an extra layer of liability protection over and above the limits of standard insurance policies like auto or homeowners insurance. It is designed to cover liability claims that exceed the coverage limits of the primary insurance, such as a large lawsuit for bodily injury or property damage. It does not cover personal property damage, health insurance, or legal fees for criminal defense. Question 12. Which of the following is typically covered by homeowners insurance under its liability section? A. Damage to the insured's own home caused by fire. B. Bodily injury to someone who slips on the insured's property. C. Medical expenses for the insured's family members. D. Damage to the insured's car in an accident. Answer. B. Bodily injury to someone who slips on the insured's property. Explanation. Homeowners insurance typically includes liability coverage that protects the insured if someone is injured on their property, such as in the case of a slip and fall accident. This coverage may pay for medical bills and legal expenses. It does not cover damage to the insured's own home, covered by property insurance, medical expenses for the insured's family, or damage to the insured's car, covered by auto insurance. Question 13. Which of the following scenarios is NOT covered by a flood insurance policy? A. Flooding caused by heavy rainfall. B. A broken pipe flooding the interior of a home. C. Flooding caused by melting snow. D. Storm surges due to a hurricane. Answer. B. A broken pipe flooding the interior of a home. Explanation. Flood insurance typically covers damages caused by rising water from external sources, such as heavy rainfall, melting snow, or storm surges. It does not cover damages caused by internal issues like a broken pipe or water from a malfunctioning appliance. For internal water damage, a homeowner would need a separate water damage or plumbing coverage. Question 14. Which of the following is a common exclusion in a life insurance policy? A. Suicide within the first 2 years of the policy. B. Death resulting from a car accident. C. Death due to natural causes. D. An accidental death while traveling overseas. Answer A. Suicide within the first 2 years of the policy. Explanation. Many life insurance policies include a suicide clause that excludes coverage if the insured dies by suicide within the first 2 years of the policy. This is to prevent individuals from purchasing life insurance with the intention of committing suicide shortly after. Death due to natural causes, car accidents, or accidents while traveling are typically covered unless other exclusions apply. Question 15. Which of the following would be considered a covered loss under commercial property insurance? A. Theft of inventory. B. A loss of income due to market conditions. C. Employee theft. D. Intentional damage caused by the business owner. Answer A. Theft of inventory. Explanation: commercial property insurance typically covers losses or damages to business property such as theft of inventory, fire damage, or natural disasters. Losses due to market conditions, e.g., economic downturn, are not covered by property insurance, nor are damages caused by the business owner or internal theft, which may require separate coverage like crime insurance. Question 16. Which of the following is an example of an exclusion in a health insurance policy? A. Preventive care such as vaccinations. B. Treatment for pre-existing conditions after a waiting period. C. Injuries resulting from a recreational activity like skiing. D. Emergency room visits for an accident. Answer: C. Injuries resulting from a recreational activity like skiing. Explanation: health insurance policies often have exclusions for injuries sustained while participating in high-risk recreational activities such as skiing or skydiving. These activities may be excluded from coverage unless specifically included in the policy. Preventive care, treatment for pre-existing conditions after a waiting period, and emergency room visits for accidents are typically covered under most policies. Question 17. In a property insurance policy, which of the following is the primary difference between actual cash value and replacement cost coverage? A. ACV provides coverage for property that has been depreciated, while replacement cost covers the full cost of replacing the property without depreciation. B. ACV provides coverage for property without depreciation, while replacement cost covers property based on its market value. C. ACV covers property only for fire damage, while replacement cost covers all types of damage. D. There is no difference between the two types of coverage. Answer: A. ACV provides coverage for property that has been depreciated, while replacement cost covers the full cost of replacing the property without depreciation. Explanation: the primary difference between actual cash value (ACV) and replacement cost coverage is how depreciation is handled. ACV takes depreciation into account, meaning the insurer will reimburse the current value of the property factoring in age and condition. In contrast, replacement cost coverage reimburses the insured for the cost of replacing the property with a new one without any deduction for depreciation. Question 18. What is the function of surety bond in a business contract? A. To provide financial support for an employee's personal debts. B. To ensure that the terms of a contract will be fulfilled by one party. C. To protect the business against financial loss from theft or fraud. D. To ensure a business against product liability claims. Answer: B. To ensure that the terms of a contract will be fulfilled by one party. Explanation: a surety bond is a contract between three parties: the principal, the business or individual needing the bond; the obligee, the party requiring the bond; and the surety, the party that guarantees the bond. A surety guarantees that the principal will fulfill their obligations under the contract. If the principal fails to meet these obligations, the surety compensates the obligee up to the bond amount. Question 19. Which of the following is NOT covered under homeowners insurance policy? A. Damage to the house from a lightning strike. B. Injury caused by a dog bite. C. Loss of personal property due to theft. D. Damage to a vehicle parked in the driveway due to vandalism. Answer: D. Damage to a vehicle parked in the driveway due to vandalism. Explanation: homeowners insurance generally covers damage to the home itself, personal property, and liability for injuries occurring on the property. However, damage to a vehicle, even if it is parked in the driveway, is not typically covered under homeowners policy. This type of damage would be covered under an auto insurance policy, specifically under comprehensive coverage. Question 20. Which of the following is an example of term life insurance? A. A policy that provides coverage for an insured's entire life as long as premiums are paid. B. A policy that provides coverage for a specified period of time, such as 10, 20, or 30 years. C. A policy that combines life insurance with an investment component. D. A policy that provides permanent coverage with a fixed premium. Answer: B. A policy that provides coverage for a specified period of time, such as 10, 20, or 30 years. Explanation: term life insurance provides coverage for a specific period, term such as 10, 20, or 30 years. If the insured dies during the term, the beneficiaries receive a death benefit. However, if the insured outlives the term, the coverage ends and no payout is made. It is typically less expensive than permanent life insurance, which provides lifelong coverage. Question 21. Which of the following is the primary purpose of workers' compensation insurance? A. To cover medical expenses for employees injured on the job. B. To provide coverage for property damage at the workplace. C. To cover the cost of legal fees in case of employee disputes. D. To protect employees from job loss due to company downsizing. Answer: A. To cover medical expenses for employees injured on the job. Explanation: Workers' compensation insurance provides coverage for employees who are injured or become ill as a result of their job. It covers medical expenses, lost wages, and rehabilitation costs. It does not cover property damage, legal fees for disputes unrelated to injuries, or protect against job loss. Question 22. What is typically covered by collision insurance in an auto insurance policy? A. Damage to your vehicle caused by a collision with another vehicle or object. B. Theft of your vehicle. C. Injuries sustained in an accident regardless of fault. D. Damages to another person's vehicle in an accident. Answer: A. Damage to your vehicle caused by a collision with another vehicle or object. Explanation: Collision insurance covers damage to the insured's vehicle in the event of a collision with another vehicle or object, regardless of who is at fault. It does not cover theft, injuries, or damages to another person's vehicle which are covered by other aspects of auto insurance. Question 23. What does comprehensive coverage in an auto insurance policy typically cover? A. Medical expenses for the driver and passengers. B. Damage to your car from non-collision events like vandalism, weather, or theft. C. Damage to another person's property in an accident. D. Only collisions with other vehicles. Answer: B. Damage to your car from non-collision events like vandalism, weather, or theft. Explanation: Comprehensive coverage provides protection against damage to your vehicle that is not caused by a collision. This can include damage from events such as vandalism, theft, natural disasters, falling objects, or hitting an animal. It does not cover medical expenses, liability, or collision-related damage. Question 24. What does the term deductible mean in an insurance policy? A. The amount the insurer will pay for a covered loss. B. The amount the insured must pay out of pocket before the insurance coverage kicks in. C. The total amount of insurance coverage provided by the policy. D. The amount of time it takes for an insurance claim to be processed. Answer: B. The amount the insured must pay out of pocket before the insurance coverage kicks in. Explanation: A deductible is the amount of money the policyholder must pay out of pocket before the insurance company begins to pay for a covered loss. For example, if a policy has a $500 deductible, the insured must pay the first $500 of any claim, and the insurer will cover the remaining costs. Which of the following best describes a named perils insurance policy? A. A policy that covers all types of losses except those specifically excluded. B. A policy that covers only the perils specifically listed in the policy. C. A policy that provides coverage for any type of accident, regardless of the cause. D. A policy that covers only personal injuries and medical expenses. Answer: B. A policy that covers only the perils specifically listed in the policy. Explanation: A named perils policy provides coverage only for the risks or perils explicitly listed in the policy. Common named perils include fire, theft, vandalism, or certain types of water damage. Any risks not listed in the policy are not covered. Question 26. In an insurance policy, what does the exclusion section typically describe? A. The types of losses the insurer will cover. B. The amount the policyholder must pay before the insurer covers a loss. C. The specific types of risks or events not covered by the policy. D. The total policy limits for coverage. Answer: C. The specific types of risks or events not covered by the policy. Explanation: The exclusion section of an insurance policy outlines the specific events or risks that are not covered by the policy. This could include certain natural disasters, intentional damage, or pre-existing conditions. Understanding exclusions is important because they help the policyholder know what to expect and what is not protected under the policy. Question 27. What is the coinsurance clause in a property insurance policy? A. A clause that requires the policyholder to share a portion of the loss with the insurer. B. A clause that guarantees the insurer will cover all losses above a certain percentage. C. A clause that reduces the premium for higher coverage limits. D. A clause that provides coverage for property losses in excess of the policy limit. Answer: A. A clause that requires the policyholder to share a portion of the loss with the insurer. Explanation: The coinsurance clause in a property insurance policy typically requires the policyholder to maintain insurance coverage equal to a certain percentage of the value of the property, e.g., 80%. If the insured fails to meet this requirement, they may have to pay a portion of the loss. Coinsurance ensures that policyholders have sufficient coverage to avoid underinsurance. Question 20. Which of the following would be covered by a travel insurance policy? A. Lost wages due to illness or injury at home. B. Medical expenses for treatment received during an overseas trip. C. Theft of personal property at home. D. Non-refundable costs from a cancelled flight due to weather conditions. Answer. B. Medical expenses for treatment received during an overseas trip. Explanation. Travel insurance often covers unexpected situations that arise while traveling, including medical expenses for treatment received abroad, trip cancellations, lost baggage, or emergency evacuation. It does not typically cover lost wages, theft of property at home, or flight cancellations due to weather unless specified as part of the policy. Question 29. Which of the following is the primary difference between term life insurance and whole life insurance? A. Whole life insurance is typically cheaper than term life insurance. B. Term life insurance provides lifelong coverage, while whole life insurance provides coverage for a set term. C. Whole life insurance includes an investment component, while term life does not. D. Term life insurance includes an investment component, while whole life does not. Answer. C. Whole life insurance includes an investment component, while term life does not. Explanation. Whole life insurance provides lifelong coverage and includes an investment component, cash value, that grows over time. The policyholder can borrow against this cash value. Term life insurance, on the other hand, provides coverage for a set term, e.g. 10, 20, or 30 years, and does not accumulate any cash value or investment component. Question 30. What is the purpose of an insurance underwriter? A. To sell insurance policies to potential customers. B. To investigate and process insurance claims. C. To assess risk and determine the appropriate premium for a policy. D. To ensure that policyholders meet the legal requirements for insurance. Answer. C. To assess risk and determine the appropriate premium for a policy. Explanation. An insurance underwriter evaluates the risk of insuring a potential policyholder and determines the appropriate premium for the coverage based on factors such as health, occupation, or the value of the insured property. They play a critical role in ensuring that the insurance company takes on manageable risk while offering fair pricing for policyholders.